It's Tuesday, it's MPC Decision Day. Good morning and welcome to Business Morning on Channels Television. Well, it's going to be a very busy day today as we bring you the details of MPC, the decision, and of course, conversations around that, which of course will continue tomorrow. But for today, let's start off with Business Morning, and oil prices is top on the list. It steadied in early Asian trade on Tuesday as indications that producer alliance OPEC Plus sought to avoid a collapse in prices, along with a slight softening in the US dollar, tapered an earlier sell-off. Brent crude futures rose 26 cents to $84.32 a barrel. We've seen oil drop to that 85 cents yesterday, while US Texas Intermediate crude futures was up 19 cents to $76.90 a barrel. Both benchmarks sank about $2 a barrel yesterday, largely on US dollar strength. OPEC Plus has boosted output this year after record cuts put in place in 2020 due to demand destruction caused by the COVID-19 pandemic. But in recent months, the organization failed to meet its planned output increases. An easing of the US dollar, which trades inversely with oil, helped to support prices. But while the US dollar weakened in post-settlement trade, early on Monday, it hit its strongest level since May 2002. In the commodities markets, U.S. wheat futures fell more than 2%, and corn and soybeans followed the weaker trend on Monday as fears of a global economic downturn, a rising dollar, and expectations of a bumper wheat crude crop in Russia weighed on commodity markets. Forecasts for favorable dry weather for the harvest in the Midwest added pressure. Chicago Board of Trade December wheat settled 22.5 cents at $8.58 a bushel. And in Nigeria, we've been talking a whole lot, of course, about the exchange rate and FX management. The International Monetary Fund has recommended a unified exchange rate to strengthen Nigeria's macroeconomy and external reserves. IMF representative for Nigeria, Mr. Ari Ison, listed this among other IMF policy recommendations in a keynote address at a quarterly meeting of the Financial Market Dealers Association, which was hosted by First Bank Limited. He canvassed complementary macroeconomic and structural policies to preserve competitiveness gains from any exchange rate adjustments in the country. Corroborating the IMF's views, the Managing Director, Chief Executive Officer of First Bank of Nigeria Limited, Mr. Gbenga Shobo, said that Nigerian financial market has evolved over the years and the time has come to build strategies around which it will bring desired results for all to see and benefits from. So it's commodities time, and we'll have Mayo Aige join us, but we'll just take a breather and then we'll be off for that conversation. This is Business Morning on Channels Television. Well, you're welcome back. We delve straight into that. Commodities markets, and Mayo Aige is joining us virtually today. Hi, Mayo. Good morning. Thank you so much for joining us this morning.
Hello, Amy. Thank you for having me.
Awesome. So the dollar pulling and pushing a whole lot of things, and then we saw it tapering yesterday, and then we saw oil also dropping to $85. I thought we were going to stay forever on that $90 a barrel. But do you think this has come to stay? Is this a new norm, or is this just a passing phase, this transient?
Well, for oil, I don't think it's not necessarily a passing thing, right? We still expect that there's a huge possibility that by the end of the year, we'll see oil get back to $100 per barrel, right? And there are a couple of reasons for it. chief of which is tightening of supply. It's expected that in the last quarter of this year, we will see an increase in the demand for oil, and this is most likely going to be because of the shift from natural gas due to the supply constraint in that space. We see demand shift to oil in the last quarter, and this may actually help to push up the prices, the oil prices. And also, generally looking at U.S. or strategic oil reserves, they have decided that they will stop pushing out from their oil reserves. And also the EU we're expecting a partial ban on Russian oil to kick in by, I think, December by the EU. And then also we look at Iran, a major producer of oil. Well, it's unlikely that their nuclear deal will kick in, and so it's unlikely we see an increase in the supply of oil from that end. And so these things will actually affect oil and sea, and there's a possibility that with these things happening, we will see oil prices reach $100 per barrel by the end of the year. But there's also still that issue with the dollar. You know, most commodities, oil especially, is sold in dollar terms, and right. So when you have the strengthening of the dollar, it's possible that you will see that demand may drop because holders of other currencies may not be able to afford so much of oil. So it may be temporary. This decline we see it may be temporary. We might actually see an uptick in the prices of oil by the end of the year.
Yeah, because Federal Reserve and other central banks are determined to tame inflation by hiking interest rate. Nigeria is meeting today, and most likely there'll be another hike of the interest rate. So what of course this does, strengthening the dollar, is that our fuel subsidy keeps increasing. What we're paying for fuel subsidy. Yeah,
what we pay for fuel subsidy would keep increasing because, like I mentioned, oil is sold in dollar, right? Commodities are dollar denominated, and so we'll be paying more for subsidy. We also have the exchange rate doing its own thing on the side, and so this is going to only be impacting subsidy. We're already paying. We already saw an increase in subsidy payment for August, I think, and so we would only expect to see more of that. And then the strengthening of the dollar and all, it's not just in all subsidy. We're also going to see it affect our debt profile because we're going to be paying more to service our debt now, and so all of this poses a huge problem for the country.
So in August we paid more than $1 billion for fuel subsidy. What implication does that have for the Nigerian economy?
Well, implication is that we have to find a way of number one, we have to find a way of sustaining this debt, this subsidy payment, right? It only means that the government may have to borrow more, right? And the cost is our debt servicing will increase. We're going to see more budget deficit on our end, and then we're going to borrow more. We don't even have the capacity for this right now. If we go back to oil, yes, we had an increase in our production quota. We can have higher oil prices to cushion this effect, but we're not even producing as much, right? So it only keeps the government in a more difficult state right now, servicing the debt. And invariably, what the government may have to do is actually what do you call it? Is it reduce the inflation rate, like letting oil prices be determined by different states, maybe. And I think we're already seeing that now. And they may actually try to reduce subsidy. We might see all petrol prices increase a bit more just to reduce the amount of subsidy that the government has to pay. And this would only get back to our inflation. It will affect food prices, and we only see higher inflation. And government will also try to look at ways to stem inflation, which also goes back to affecting the economy in the long run.
Well, I guess if the government could deal with the issue of oil theft, it will also help us at this time.
Yes, it will go a great deal in helping us. That's the major problem Nigeria has now from our oil production. We've mentioned oil prices reach $100 per barrel, but did we benefit so much from that? No, we didn't benefit so much from that, because in as much as, like, let's give an example. For August, we had our production quota increase, but we produced less than that, right? And this is mainly due to oil theft. There's been a call for the government to step into this and resolve this issue. We've even seen companies close down their oil rigs in the region because of oil theft. I think as of 2019, we had 16 functioning oil rigs. Now we have about between 8 to 10 functioning, and it even fluctuates, right? And so all of this is affecting our production. So if the government can look into this, let's even have a system for measuring how much oil we actually produce, what's actually produced, what's actually exported, what is actually channeled to domestic use. Let's have a measure so we know what is being produced. We can start from there. How can we should channel more security forces into these areas? I know that there's an agreement with Tompolo, for instance, and let's see how far that goes in resolving the issue. But this is an issue that needs to be addressed for Nigeria to benefit from oil prices and also reduce, gain more revenue and see how we can pay our subsidy.
How will all of this, you think, affect the MPC decision today?
Well, all of this, we were expecting that the MPC would actually increase rates by maybe 50 to 100 basis points. And the reason for this is a major factor that is considered is inflation. And we've seen inflation still increase in the past month, right? It has not reduced, it has not tapered. So we believe that the MPC would the CBN would take this into consideration. And also, apart from that, the CBN may also look at what is happening globally. There's a global trend we have from the UK to the US. Even you were having central banks around the world increase their interest rates. And so if they are increasing it also based on inflation trend that they're seeing, we're also seeing the same thing. So it's expected that the federal government will go in line with what is happening globally, considering that we're also facing the same problems that governments around the world are facing.
Yeah, well, we're facing the same problem, but we do see countries like the UK, at least they have some packages to help reduce the impacts, you know, but we don't have such packages in Nigeria. But anyway, let's go to the liquefied natural gas. The liquefied natural gas, we see that it's dipped, and it's been surging for a while. Now it's dipping.
Hello?
The liquefied natural gas,
okay,
we see that it has dipped, but for a while it was surging. Why is it dipping now?
Well, in this space, the liquefied natural gas space, we also have issues that in this space that actually affect our production, right? The infrastructure is also not so great, and this is part of the reasons why we see dip sometimes in our production in liquefied natural gas. Even when we look at what we produce now, it's a far cry from what we got from our potential, right? We have about 3 times the oil reserves, gas reserve. We have 3 times gas reserves than we have of oil, but we produce so little of it, and this is due to structural issues. And this is also what is impacting the production that we're seeing and the dip that we're seeing. If these issues are not resolved, we might not have a stable production currently.
Okay, so looking at the commodity space now, we see wheat price is also dipped. Is it because of the wheat coming out through the Black Sea from Ukraine?
Yes, it's because of it. It's increasing the supply that we're seeing, especially there's been supply to the poor part of the Horn of Africa, and the increase in supply is what is affecting the price of wheat and how we're seeing it decline, which we could say is beneficial to Nigeria, considering that we import a large amount of wheat we consume locally. However, the interest rate still plays a part in how much of a relief we actually get from the decline in global wheat prices.
But I don't think it has. We're feeling the impact yet. I mean, of this dip, or it's too soon to say.
Well, the interest rate plays a part in it because we're importing. You know that apart from the global inflation, exchange rate pass-through effect is also a major driver of inflation in Nigeria. So this will still play a major part in how much of the relief we actually feel locally when we see prices decline globally.
And also on your slide, we see Naira appreciates. I don't know if we should rejoice or just watch and hold our breath.
would say watch and hold our breath, right? I'd say watch and hold our breath because there's still a lot of volatility in that space, right? So we can't say for sure. There's a lot of artificial happenings there, and it's still based on demand and supply. So I think we should watch and hold our breath for now.
But what led to this appreciation?
The appreciation is we probably saw increase in supply for the day, but it's not like our reserves grew.
Yeah, I
right?
think our reserves even dipped.
Yes, so it's just the market dynamics that really just happened. So it's not it's transient. It's not a permanent thing, should we say?
Okay, thank you so much, Mayowa, for putting us up to date on happenings in the commodities space this morning. Have a great day ahead.
You too.
We'll take a break now. After the break, we'll do pension for mortgage, pension for equities. Can you be a beneficiary? Well, join us for that conversation after the break. This is Business Morning on Channels Television. The National Pension Commission has approved the issuance and immediate implementation of the guidelines on accessing retirement savings accounts, that's the RSA balance, for payment of equity contribution for residential mortgages by RSA holders. According to PENCOM, the approval was in line with Section 89, subsection 2 of the Pension Reform Act 2014, which allows RSA holders to use the portion of their RSA balance towards the payment of equity for residential mortgage. Well, to help us understand how this would affect you and if you can really access this, when we look at the realities in Nigeria, we have Davida Echitabo, Certified Wealth Manager, joining us in the studio. Hi, Davida. Good morning.
Hi, Nee. Good morning. Thank you for having me.
Good to have you. Well, I think there's been a lot of rejoicing since this news broke out. I think it was on Thursday or Friday. Checking the markets, even the mortgage stocks got some attention.
Attention, after all.
Who would have thought?
Who would have thought?
Yeah, but let's look at the reality, because in Nigeria we see a lot of good policies, good pronouncements, but when it comes to accessing it, we see another thing. This is not new in a lot of countries.
No, it isn't.
It's not new. How realistic is it for anybody who has pension? You know, I mean, sometimes you wonder when you're going to access this pension, because for decades you're just working and you get your notification, oh, your pension has been deducted for this month, but you don't know when it's going to be useful to you. How realistic is this workability of it?
Okay, so on a lighter note, we will access our pension sometime just before Jesus comes. But that being said, it is workable. It is workable because I would like to first of all say that we have seen evidence, at least from the National Pension Commission, we're all on this contributory pension scheme. Pensioners, retirees are getting paid. The process is working. People are getting paid. So this is just, how will I put it, to make it even a more valuable endeavor to the average workforce, the contributors like you and I. In terms of workability, interestingly, late yesterday evening, the guidelines, the more detailed guidelines, was released by the National Pension Commission, and it's on their website for whomsoever may be interested in going to get more details there. And it's quite practical. Yes, I imagine that there will be some initial hiccups, but for everybody who meets the criteria, you know.
Which is that you've been contributing for at least 5 years.
Yes, 60 months, 5 years. You know, both employer and employee portions. That you are also not a retiree. Retirees are exempted. That's pensioners are exempted. Another set or category of people who are exempted would be people who have less than 3 years to retirement as well. You know, but if you are working, self-employed, you are eligible to participate in this, even though you may have taken 25% before because maybe you stopped working for whatever reason and decided to go into your own endeavor, you are still eligible to participate going by the guidelines. So it is actually quite available to everybody. Even micro pensions isn't left out, you know, but again, micro pensions started in 2019. For them to access it, it means their own access will be in the future, around about 2024.
Because you have to have contributed for 5 years.
Yes, 5 years.
All right. So how it works is you go to your pension or you go to your mortgage first.
Okay. So you go window shopping and look for a house that you like within your budget.
Please remember, exactly. I wanted to say, please remember your budget when you're looking for that house.
I know, right? So you go window shopping, you find a house that you like, and you get an offer letter from the seller, the owner of the house. You take that document to the primary mortgage institution, that's the mortgage lenders. That's what they're referred to as in the guidelines released. They would get that document from you. They would do due diligence. When they have confirmed that everything is kosher, everything is genuine, then they would let the client, you and I know, we would go to our PFAs, we would get a copy of our RSA statement for the purpose of providing it to them to make sure that the 25% that you would be allowed to withdraw for purposes of equity would be sufficient to meet that need. Where it is insufficient, the client, being the RSA holder, would be expected to pay the difference to the account of the mortgage lender institution, after which they would process, they would give you an offer letter for mortgage, which the client will now present to their PFA. PFA will do the due diligence, make sure the documentation calculations are right. The client, of course, would have filled an application form, and then the process of payment and all that will happen. I would like to say at this point, though, that even though the responsibility has been put in black and white for the mortgage lenders to do due diligence and get a valuation, at the end of the day, the primary stakeholders are the clients. So people are also meant to, you know, do due diligence and not just go and get bamboozled by somebody who's trying to sell off something that doesn't exist to them.
So due diligence in this period is ensuring that that property is genuine and it's up for sale, the papers are right, to check with the government, to be sure you're not getting swindled and all of that. I believe that's what due diligence is about.
I would like to also believe that. And that's where I think the mortgage lending institutions would need to definitely have collaborative relationships, because their primary capacity is not checking out houses and checking whether they're on dry land or on their water and all that. So I'm sure that they're going to have to partner with a lot of real estate, you know, type institutions just to make sure that the diligence is done appropriately. And there I have noted a lacuna, because there is no timeline stated in the guideline for that due diligence. And I really honestly don't know that there can be a guideline, because what may take one property easier for, you know, verification and validation to happen may be a bit more tricky with another one. But those are things that will happen.
So do you think that the mortgage would want to take this extra burden?
Yes.
Because it brings more markets to them?
Absolutely.
So more work, more services, more markets?
That sector has been quiet. Has been pretty quiet. I'll use quiet, you know. And so even though this is going to task them, but I'm sure that they have done the numbers. You know, they have looked at what's the cost benefit, you know, and they're not going to do it by themselves. They would subcontract, I imagine. A lot of detail would be provided as, you know, the practice of this guideline goes into action. But off the top of my head, I imagine that they would be doing a lot of partnering. So that industry, the real estate industry, is getting a much needed vamp.
At least getting their securities active. I think that's one good for them. So they have to embrace it.
Yes.
But I want to clarify now. An individual goes window shopping or shops for a house, gets a property off a budget of 100 million, for instance. So what do you consider when you're looking at the budget and the 25%? Because you're going, the 25% I believe is for the equity for the first one. That means you're going to have to be servicing until the end. So
absolutely.
You also have to take that into consideration. I think there's some conditions so that you won't get mortgage that's how many percent more than what you're earning monthly, so that we're sure you can afford, you know, to service whatever you have to service every month.
Yes. Okay, so first of all, the deal is nobody will get more than 25% of their RSA balance towards equity. Now, let's assume that someone goes shopping for a house. Rule of thumb would be they know what they can afford. There is no need going to purchase a 100 million naira house when you know that your salary and your RSA balance cannot even come close. You know, so equity, I even think, is the smaller part of the conversation. It is the meeting up with the monthly mortgage obligations. That is where the responsibility comes in, and that's what a lot of times as a certified wealth manager, we have these conversations on financial planning. So it's not just because you can afford to buy something. How many things are sacrificing themselves to meet that? You know, which also goes in line with what it is, you know, you just mentioned. Can you meet up? So you could have done the first fell swoop, but every day, every month, are you going to run into trouble after a while? You know, there's a part of the guideline that refers to when that a couple who are both working can decide to do a joint application, you know, and then, of course, it also must take into consideration that life happens. So the guideline goes ahead to say that should one of the spouses pass on, the other person has the right to continue if they can afford it. Because those are realities. Two people were footing something before, you know, so if the person cannot afford it, then they would need to stop that process and the person would need to start afresh.
So that's like refinancing.
There you go.
Debts.
There you go. You know, so a lot of that, again, would be addressed in more detail as time goes on. I'm sure there'll be subsequent sub-guidelines to address these peculiarities.
Yeah, and then the mortgage association, I think they have to come out to talk to members of the public on how they intend to implement this. And then also, how long will it take to go from this documents and paperwork and conversations to when people can actually access it? Yeah.
Okay, so with regards to the mortgage association, we expect that a list of mortgage lenders would be published very soon. I am certain that there are conversations going on with CBN and PENCOM right now to make sure that that is addressed. But that being said, I visited both the CBN website and the NDIC website, and between both of them, there are roughly 40 plus primary mortgage institutions. So I'm sure that conversations are happening to make sure that the mortgage rates, the mortgage process and all that, you know, is a bit more efficient and considerate to people, because it is.
But all of this, I guess, would be your area of strength, where pension now becomes even more important.
Yes.
Because now it can actually give you a house.
Actually, you know, right? Are we talking about Aso Rock? Okay, so yes, but you know, this is also something that is going to make people who have been laid back about pensions to do something about it. Because look, at the end of the day, you and I just want to know that no matter what falls apart, we need the roof over our heads to be secure. Whatever we do inside our house behind closed doors, it's up to us. But we need to make sure that we have that safety of we own our own houses and we avoid any form of unnecessary embarrassments, you know, over the course of time.
Uncertainty over the nearest future. Well, thank you so much. I know this is an ongoing conversation. We're going to follow up with the Mortgage Association, with PENCOM, you know, the parties concerned, and hope that they will respond and come to tell us their plan and how soon.
Yes.
Yeah, thank you so much, Davida Echetabu, a certified wealth manager. for your time and your
Thank you.
findings, sharing your findings this morning.
Thank you very much.
All right, so we're going to go to the market now. Yesterday, I was really happy to be the one on the market to give that fresh news at least that the market regained, even if it's just temporal. I mean, I always tell Will, I'll be the one to bring the good news, and I was glad to bring that last night. I hope I'm not disappointed today. I hope that investors will continue buying the dip, and we would have at least a little bit of positive at the close of trade. And mentioning Will, she walks into the set. I'm the carrier of good news.
Oh,
I don't know about you.
No,
I know you reported the market last week, and it was almost all negative or all negative.
Yeah, we just had one marginal, uptick last week.
On
but
one day.
Yeah, it was just a precursor to what you experienced yesterday. So it's more like we're the forerunners of the good news.
All right, great.
Yes.
Great. Yeah, that's the number. That's the number, right?
And speaking of stocks, an interesting conversation you had with this lady, the guest here, I'm talking about mortgage stocks. So, the NASD, the unlisted market last week, we saw an uptick in stocks for mortgage banks. And I think maybe investors are already looking at that direction and saying, opportunities are coming out from that stock.
So we do hope that the Mortgage Association, they make the most of this and make it a reality, because once people know, I mean, that's what happens to all those Boa food, Boa cement, because it's a moving stock.
Yes, and people are going to say, if they're going to be getting 25% equity, and there's more liquidity in that particular sector, industry, and people are going to really buy into that stock. I'm waiting to buy into that stock too. So activities in the domestic equities market resumed the week on a positive note. The all-share index moved up 0.39%. It's closed at 49,218 points yesterday. Still not, we're inching. I don't know if we're inching higher to the 50,000 level or moving backward to the 48,000 level, but it's in the middle there, it's dangling and hanging there. But bargain hunting, as he mentioned earlier, supported the buy interest, supported the positive performance. Boa Cement was up 5.4% yesterday. Now we see month-to-date returns settling at 1.2% now, still in the negative, but year-to-date returns has moved up to 15% from 14% that we opened the week with. Now, total volume of trades transacted was up about 29.5% yesterday to close at 119.28 million units. We had value down to the millions yesterday. It was not very impressive. 857 million units, 857 million naira. I'm always used to saying it in units. So it was traded yesterday, all in 3,580 deals. Now we have Ambrose Amodion. He's the Chief Research Officer at Invest Data Consulting, to tell us more about what happened in the market yesterday, and basically to give us an insight into what direction the market is going to take from this day forward. So Ambrose, we have Ambrose in the house to talk to us about that. Ambrose, are you there?
Yeah, thank you for having me. Yes, looking at the market performance yesterday, I would say that there's a rebound, but rebound in tech analysis, we call it a dead cat bounce, until we see a kind of a sustained trend today. We'll say, yes, we are really back to a good market. But the good thing is that looking at the chart, see that market has been on a kind of a downtrend. But seeing the rebound yesterday, we saw what we call a bullish engulfing and on the daily chart, looking at the candlesticks, it tells you that market is on the way up. But until confirmed today, that's why I said, technical analysis, this move for a dead cat bounce. But until it sustains today, we will not see the uptrend. But looking at the monthly chart for the market, I can see that the market has been on a kind of correction for straight 3 months. But in this month of September, we're seeing a kind of decline. And it has a lot of expected earnings that are coming on in the month of October. And also the outcome of MPC meeting also determine where the market goes from here. So that the monetary policy has really dampened investors' sentiment all this while. We believe that the outcome of, can you hear me?
Yes. Go ahead. You said the outcome of the MPC meeting. Complete your thoughts, please.
We'll determine the direction of market to go from here, because we saw a rebound yesterday. If it is sustained today and the outcome also come out positively, that means market will see a strong rebound in the month of October. That's why this week we expect the market to be in a mixed trend until outcome of the meeting today, and also end of the quarter will be dressing, also support the market. But really, what will drive the market is liquidity, and it will now be from the outcome of them is where is the sector investor be looking at.
Okay, let's look at the technicals, Mr. Ambrose. Let's look at the technicals. Looking at the charts, let's look at what the month is talking about right now. Can you tell us where we are right now on the charts? Are we seeing a rebound? Is it going to be sustained? Because we opened the week positive, but are we going to sustain this positive sentiment, looking at what the chart is saying at the moment?
On the monthly chart, we're seeing that the market has been on a decline. For what we saw yesterday, being the last, this being the last month, the last week for the month of September, might see a rebound. But what we saw yesterday is not enough to confirm, like I said earlier, until we see a sustained trend today. That we look at that great confirmation this morning. For market, I feel that the market is still uptrend because still above 50 days moving average and also 20 days moving average. The market is strong on a monthly chart. Also on a weekly chart, market is still strong. Only on a daily chart, we see that market is below 20 days moving average and 50. But for me, looking at this chart now, market has no potential to rebound or depend on what on the fundamental aspect, which is what the earnings were expected and also liquidity. And the outcome of the meeting today will determine. For what we saw yesterday, a good move. We saw kind of a bullish engulfing chart candle yesterday. But this morning, we're seeing also the market trying to open in a positive trend. Or if it is sustained at the end of the meeting, or any between the meeting close today, that will give us a clear direction. But for me, investors in the market should not panic, but rather it's time for them to go for sectorial rotation. Which sectors or industry benefit from even the rate hike? As we are discussing before, the liquidity that will come from the PFAs as well as even the mortgage move. And at the same time, the PFAs are the major player in this market since the last 3 years. If they come back to the market at the end of the month of September, in October, seeing the third quarter, that will change the trend of the market. That means any investor that are thinking long term, not panic. Only traders might be a bit trade, but for investors that are thinking long term, it's not time for you to panic. But the market still has got a long-term positive.
Thank you, Mr. Ambrose. It's always long-term investors that probably make the most of this, dip that we see at the moment. So, he mentioned the PFAs as a pension fund administrators. We're still talking pension, we're still talking mortgage. That is where the direction of the market right now. The investors key into that, they probably reap a lot of rewards, and not very long now.
Yeah, and that's why here we're on Business Morning. We're going to stay on that issue and find out, the implementation of it and see how, that will affect, because once it affects the life of individuals, then it can move the markets, move investor sentiments in the market also.
Definitely.
Well, thank you so much, Will.
Thank you so much.
And we'll take a break now. When we come back from the break, we'll head to our London studio where Juliana is already standing by. Do join us again. We head to the UK now where Juliana is standing by. Good morning, Juliana. I don't know if there's anything new we're going to talk about this, but Kwasi Kwarteng is to meet with bank bosses later today. Of course, talking about those tax cuts and reactions we've been talking about for days now. But what are the expectations from this meeting?
What are the expectations? Well, I think that's a good question. Not sure what the answer is. Good morning, Inni. I think it's fair to say that Kwasi Kwarteng, the Chancellor, has not had an easy couple of days, to say the least. He is the talking point of the country and of global markets ever since on Friday he delivered that so-called mini budget announcing £45 billion worth of tax cuts. There's also a poll this morning from YouGov on behalf of the Times, which puts the Labour government 11 points ahead of the Conservatives, and that is the highest lead they've had in about 20 years. If there was a general election tomorrow, Labour would swing it, and that's how he is going to be entering this meeting. Now, this meeting he's going to be joined by the City Minister, Andrew Griffith. He's just been appointed. It was always in the diary, as to be expected, because if you're a new Chancellor, you've got to meet hedge fund bosses and bank bosses who are typically on a Conservative side. And if the pound didn't slide, things would have been rosy, because, of course, he kind of appeased them by abolishing the 45p tax rate. Anyone over 150 grand benefits from that. Bankers are in that category. And he also ended the cap on bankers' bonuses. But then, of course, the pound dropped to its lowest level since decimalisation, and he now needs to talk about his plans for growth. Now, I think we obviously had that statement from Andrew Bailey, the Bank of England governor, yesterday, trying to calm markets. It did a tiny bit, but then we also had an intervention from the Treasury, which of course is headed by Kwasi Kwarteng, saying kind of hold your horses. That was only a mini budget. On the 23rd of November, we are going to outline more fiscal rules and fiscal policies ahead of the spring budget next year. That's if this government lasts that long. So it is pretty tense, but we're just going to have to wait and see, because of course there are allegations of hedge funds basically, you know, dumping the pound to earn lots of money. Is that going to be discussed? But yes, it is going to be a tense meeting. It's happening in the next couple of hours, but unfortunately for Kwasi, not under a very nice and pleasant backdrop.
Yeah, not Juliana, but I think we'll have to hold our breath and wait for Business Incorporated. If we can get details of that meeting, would really appreciate it in a couple of hours, and we trust you. They're always there for us, Juliana. We'll talk to you at 1:30. It's MPC Day in Nigeria, Juliana. We're holding our breath for two things now.
Yes, very much coordinated.
Yes, all right. So we'll see you at 1:30.
See you then.
So normally at this time, I would have to head to the screen and do that crypto numbers. I'm glad I don't have to do that now, because Laddie Williams is back from that long leave he's been enjoying. Laddie, I have to tell you, your market has not been treating me well.
It's quite incredible.
It's been a bloodbath, as you would say, it's for weeks, and then Bitcoin went as down as 18,000. Just because you're coming today, went back to 20,000. I don't like that.
It's quite interesting, because I thought I'd be walking into a bull market, but no, it's not a bull market, and it's extreme fear.
I think you were manipulating something when you were on leave, Laddie. That's why the market was in the red.
Yeah, and it's still in the red now. And we're seeing its extreme fear this morning at 20 points. You know, talking about the fear greed index for the market now. Let's flip over now. Let's see what's happening with the market cap there. We see $973.22 billion there. That's up about 6.11%. Volume traded $86.23 billion. That's up about 53%. Talking about the market cap there. Bitcoin dominance, 39.83%, below the 40% range. Let's see what's happening to the price of Bitcoin this morning there. $20,224, up a massive 8%. We saw that jump with the DXY there. Talking about the US dollar easing this morning, and we're seeing that play out in the crypto market. Volume traded $50.80 billion. If we can see what's happening with that DXY chart, we'll get that DXY chart and see how that's looking. Okay, you see it there. We see that pullback down there from 114 points, about 113 points this morning, showing that the dollar is easing, but it's still on an uptrend at this point. Let's bring in Solomon Amunde now, digital market analyst, to bring us up to speed. Hello, Solomon. Great to have you.
Yeah, good morning, Laddie.
Morning. So we're seeing the DXY actually ease this morning, and we're seeing Bitcoin having that massive jump. Is this sustainable?
I believe it's totally sustainable, but for Bitcoin, I still believe it will still come down to test about 18,500 as long as we are unable to break 22K. So we're still playing sideways. If you zoom out to like a weekly chart, we're still sideways. Nothing special has happened. It's still in an extreme fear zone. Any trader that is going in hard into the market right now is risking losing so much if you're going long. So we're still playing sideways currently.
Right, and you can still just enjoy some of these relief rallies as they come. Let's talk about Ethereum now. We know we've seen that transition to proof of POS working process there, but we're still seeing the proof of work fork. That's ETHW. That one is still, coming out, and they're claiming it's going to be the same price as Ethereum. What are you seeing?
So basically, the community, they weren't in consensus to going with proof of stake for Ethereum, and we still have a small faction of the community that still wants proof of work, basically because of so much they've invested into mining rigs and all. So basically, I feel long term we might see ETHW get to about $150, but I don't see it rivaling Ethereum to about $1,000. I don't really see that happen. No matter even if it's in the next 10 years, I don't really see that happen. But I believe it will hit $100 to $150 with a market cap of fairly around $30 billion. That is very, very achievable and possible.
Quite interesting. And how do you get the fork tokens? You know, the ETHW. How do you get that?
Yeah, basically, if you held any Ethereum till the date of the fork, which was second week of September, around September 15th or thereabouts, if you did hold any amount of Ethereum, you will get the equivalent amount as ETHW, which is the proof of work version of Ethereum. So you just need to go to your wallet. Even if you have 0.5 Ethereum or 5 Ethereum, you would get the equivalent amount to as ETHW.
ETHW. All right, Solomon Amunde, digital market analyst. Thank you so much. Okay, so we flip over to the top alts by market cap now. We see it's mostly green on that counter there, with BNB there up about 5.18%. We see Cardano, 46 cents, up 5%. And we see eCash there. So it's all green in the market. And Ini, I don't know if you're want some of these forked tokens. Talking about Ethereum, you'd have to hold some Ethereum to get any of that.
Yeah, well, I'll think about that. I think I'm more familiar with the equities. Let me stay there.
That's fine.
Thank you, Ladi. Good to have you back.
Great to be back.
So that's it on the program, but do join us at 1:30. Today is not going to be the normal Business Incorporated. It's MPC decision day, so we'll have a special edition of Business Incorporated, and we'll bring you that decision. And of course, we'll have a panel of discussion, and you would know what to expect, and then how it could affect you, affect your money, affect your economy in just a couple of hours. That's at 1:30. Do join me then during Business Incorporated. Until then, I'm Ini John Mekwa. Have a profitable business day.